The story of Credit Suisse begins in earnest 1856 with the vision of building a nation. But it ends in 2023 with a government-brokered rescue to prevent a global financial collapse.
Ja, warum hat man jetzt nicht einfach die Gruppe Konkurs gehen lassen und man hat das Schweiz-Geschäft weitergeführt?
What happened during those 167 years of the bank's lifetime? We'll find out about the cultural change that led Credit Suisse down its dark path, and how this institution that once represented Swiss caution found itself unable to navigate the very system it had ultimately created for itself.
Welcome to the Discovery Clock series.
In the early 19th century, Switzerland was still a loose and fragile political construct. Following the Congress of Vienna in 1815, the country existed as a confederation of 22 largely sovereign cantons, bound together more by mutual defence than by economic unity. There was no single currency, no standardised postal system, and internal customs barriers made the movement of goods slow, costly, and inefficient. At a time when the Industrial Revolution was reshaping economies in Great Britain and France through coal, iron, and mechanised production, Switzerland faced structural disadvantages. The country possessed few natural resources, and its mountainous terrain posed formidable challenges to large-scale infrastructure development. Yet, these constraints would also help in shaping a distinct economic model for Switzerland. The Swiss industry was developing, for the most part, in a decentralised manner, particularly in textiles and watchmaking, relying on networks of small-scale, highly specialised producers. This system favoured precision, adaptability, and export-oriented production, rather than the mass industrialisation of that era. A shift did come in 1848 with the new federal constitution. Switzerland effectively transitioned from a confederation into a federal state on 3 levels: federal, cantonal, and communal, with the cantons retaining some of their sovereignty in the process, thus creating a unified economic area with a semi-centralised federal authority over trade, currency, and infrastructure. However, political unification did not immediately resolve the country's financial limitations. Switzerland still lacked the institutional capacity to mobilise the large volumes of capital required to develop its modern infrastructure, most notably its railway system. But this problem would later be solved by one of the most influential figures in Swiss history, Alfred Escher. Born in 1819 into a prominent Zurich family, Escher rose rapidly through the political ranks, becoming a member of the cantonal parliament in Zurich, and in 1848, one of the leading figures in the newly established National Council, or the People's Parliament Chamber, which he would later preside 4 times. Escher was a leading representative of the 19th century liberalism, advocating for economic freedom, combined with strong institutions in education and infrastructure. He understood that Switzerland was at risk of being economically marginalised by its neighbouring countries. European powers were developing railway networks that would bypass the Alpine region entirely, diverting important trade flows away from Swiss territory. To address this, Escher devised a strategic long-term plan. For instance, in 1855, he played a central role in founding the Federal Polytechnic Institute, today's Eidgenössische Technische Hochschule Zürich, or ETH Zurich, a national school created to train engineers and scientists for Switzerland's industrial takeoff, from railway construction and bridge building to hydraulics, mechanics, and architecture. At the same time, Escher championed the Railway Act of 1852, which placed railway construction primarily in the hands of private companies rather than the federal state. While this approach was believed to accelerate the railway development, it highlighted an urgent need for reliable, large-scale infrastructure financing within Switzerland. Thus, in 1853, Escher co-founded the Schweizerische Nordostbahn, or Northeastern Railway, which became the country's most important private railway company. However, securing capital to expand the railway proved difficult. Foreign banks, particularly from France and Germany, were willing to invest, but often at high interest cost, and with conditions that implied political influence. For Escher, this posed a direct threat to Swiss sovereignty. And to resolve this matter once and for all, he would found in 1856 the Schweizerische Kreditanstalt, or SKA, known today as Credit Suisse. Conceived not as a retail bank, but as a financial institution dedicated to industrial investment, SKA mobilised domestic and international capital to fund large-scale infrastructure projects in Switzerland. However, things for the bank would not turn out to be smooth sail at the beginning. Indeed, the financing of private railroads was, at the time, an intensely volatile and speculative business market, which would put the bank in a very risky and unstable position. The bank would go through a period of trial and error, compounded by a management team with limited banking experience. But things would take a turn for the worst a year later with the Panic of 1857. The Panic of 1857 was a financial crisis that began in the United States and then spread internationally. It was triggered by a mix of problems. The collapse of the Ohio Life Insurance and Trust Company in August 1857, falling confidence in banks and credit markets, and a severe downturn in railroad-related speculation. Railways were one of the biggest growth sectors of the 1850s, so when railroad profits and asset values came under pressure, the damage quickly spread through the wider financial system. And because the world economy during that time was already far more interconnected than in previous decades, through railways, steamships, trade, international capital flows, but more importantly, with the coming of a new form of telecommunication that made news travel at a faster speed, the telegram, the shock moved quickly through markets from the US to Britain and other European financial centres, with some historians calling it the first global economic crisis. Caught up in the railroad speculation and tightening credit, SKA suffered substantial losses, and by 1859 was forced to write down half of its share capital. Yet, while losses repeatedly threatened its existence, the bank's viability on the long term remained strong. SKA had the powerful backing of Zurich's political and industrial elite. Supported by the city's rise as a business metropolis, the bank quickly became the nation's largest commercial bank. Having navigated this difficult period, SKA went on to pursue its mission on a grand scale. Its most significant contribution was in its role of financing the Gotthard Railway and its 16-kilometre summit tunnel, completed in 1882, and becoming one of the most ambitious engineering projects of the century and a critical north-south European transit route. It was described by engineer Adolphe Gautier as the greatest work hitherto attempted by man. As the 20th century began, the bank emancipated itself from the business that had facilitated its initial success. With the railways largely nationalised in Switzerland by 1902, SKA's focus shifted to commercial loans and emerging sectors such as the electricity industry. But the pivotal change that transformed it into a global institution came during the interwar period. In the aftermath of the First World War, political unrest, hyperinflation, and high taxes drove substantial capital from neighbouring countries towards the stability of Switzerland. As a neutral and monetarily sound nation, it slowly became a safe haven for foreign assets. The more uncertain the world became, the better business was for Kreditanstalt. This dynamic turned SKA into an internationally respected institution and helped establish Zurich as a key financial centre alongside New York, London and Amsterdam. For the first time, the assets of major banks such as SKA exceeded those of the state-backed cantonal banks. After the Second World War, Switzerland's banking sector benefited once more from its image as a safe haven for foreign capital, whilst banking secrecy, formalised in the Swiss Banking Act of 1934, became one of its most powerful competitive advantages. This marked the emergence of a distinct Swiss financial model, whose financial reputation was increasingly tied to stability, discretion, and political neutrality. Banking, political leadership, and industrial development became closely intertwined, forming a system oriented toward long-term stability and the needs of the real economy. This model emphasized prudence, credibility, and a national interest over short-term speculation. For several decades, SKA's internal culture would remain cautious and centralized, shaped by a small circle of senior executives in Zurich who valued prudence, confidentiality, and continuity. But in 1977, that reputation would suffer a major blow in what would become known as the Chiasso Affair. The Chiasso Affair was one of the biggest banking scandals at the time, and it broke in 1977 at Credit Suisse's Chiasso branch near the Italian border in the canton of Ticino. It began when branch managers, including Ernst Kurmeier, had used a Liechtenstein shell company called Texan to channel Italian funds into hidden investments for years outside of normal bank oversight. When those investments turned bad after the 1973 oil shock and the broader downturn in Europe, the structure collapsed and exposed massive losses, roughly 2.2 billion Swiss francs by the bank's own accounting, with early estimates ranging much lower. What made the affair so serious was not only the size of the losses, but the fact that it exposed deep weaknesses in control, auditing, and internal supervision inside a bank that was supposed to embody Swiss caution. The scandal became public in spring 1977. Arrests followed suit, and the bank's leadership was forced into a major clean-up and reorganisation. The Swiss National Bank even offered a 3 billion Swiss francs bridge loan to prevent a widespread panic, but Credit Suisse did not end up taking it. The bank also had to write down large losses and absorb a hit to its reputation, while the case contributed to tougher Swiss banking standards. Indeed, Swiss banks adopted the first due diligence agreement in 1977, designed to strengthen client identification and combat misuse of the banking system. For SKA, the scandal marked a turning point. With an ever so slightly damaged reputation, this accelerated internal changes within the bank and helped push the institution towards a more international strategy and subsequently a more aggressive one that would come to undermine all that the bank had achieved until now. Hello everyone, thank you for watching the video and for your patience and support. Please consider subscribing and sharing the video, and as always, see you in the next one.